Hi guys, welcome to Road to Futures. My name is HTrade and I am a partner trader of Wesley Trades HQ. So Wesley Trades HQ is a free trading Discord of where our members are trying to make it in the trading industry. So we have our rules in place. We have our members' journeys where people post their certificates, their payouts, their testimonials, etc. And you can have a look here. Regularly, there are people that are posting their payouts that they are getting from the prop firms that they are trading with and other companies, other prop related companies or trading related companies. As you can see, some of our members are quite good at what they do and just getting better and better, right? So this trading community is like a family and we all help each other as far as we possibly can. We have live streaming every single week, especially, well, specifically through the December section, when the price action wasn't very well, the streams was a little less, but now during January of the new year, the stream started picking up and we're posting more streams. So basically, the live streams will always be posted in the Wesley stream section, and it will always be announced when the stream is going live or when Wes is going live on the live stream. So basically, it's usually around 9:15 EST New York time. All right. So we also have an educational section and ask question section, etc. So the strategy that we have, well, that we're trading on, is on the 22nd of October, posted on the 22nd of October in the EduFile section. There's also a PDF document posted on the 27th of October, and on the 29th of December, there is a video on Wes's channel that explains to you how you can get started in trading in 2026. Alright, so all the live streams are being recorded and Wes posts clips of that live stream and his live trades during the stream on his YouTube channel. Me, on the other hand, I won't do it live because I trade live with Wes. Well, actually, I joined the live trading with Wes during his trading section, but at the end of the day, I will still post my trades here in my channel. And today, specifically, I want to share with you the strategy that I am trading. So let's get started. All right, so let me quickly explain to you how I'm going to use the strategy. Very simply, I'm going to make use of fair value gaps and higher time frame levels as liquidity. So basically, let me explain to you what is a fair value gap. A fair value gap is a 1, 2, 3 candle combination where the wicks of the first and the third candle creates a gap in the body of the second candle. You see, there's a gap between this wick and this wick here. Now this gap inside the body of the second candle is called a fair value gap. And I'm going to mainly use this fair value gap as liquidity. Now what is liquidity? Liquidity is simply orders that's stuck there. That's pending buy orders, pending sell orders, stop losses, etc., etc. of other companies or other traders out there, right? So very, very simply is that I'm going to use this fair value gap as liquidity and also as, especially on the higher time frame, as direction. Right. So if this is the daily time frame, I would say since there is a daily fair value gap to the upside going with a move up, I'm going to say, all right, the daily time frame is now bullish. Now, if it's the other way around, where there's 3 candles going down and there's a gap inside the second candle with that move, I'm going to say, all right, the daily time frame is now bearish. In this case, it's currently bullish, right? So what am I going to wait for? If I want to look for a trade, I'm going to wait for price to retrace into this liquidity pool where there's a lot of pending orders and stop losses, etc. That price may use that liquidity pool and then use that as fuel for its next move, either going up or breaking through this fair value gap and using it as resistance to go down. So it can do one of 2 things, right? It can respect it, or it can break through it, retest it, and use it. Actually, I already consider the price bearish on the higher time frame if it closed completely below this fair value gap. Then I already, at this point where it closed below, I then consider it being bearish at that point in time. All right. And then I also use my fib retracement tool. So basically, if I draw a fib tool from the bottom to the top, and then where am I going to see the bigger companies out there make use of the fib tool to see if they want to buy from discount or sell from premium. Premium is the top 50% of the Fibonacci tool, and discount is the bottom 50% of the Fibonacci tool. In this case now, because we are looking for a buy. Now, if we would have looked for a sell, and we then draw the fib tool from the top to the bottom, and then premium is still at the top and discount is still at the bottom. So basically, price wants to sell from this area here to this area here. So the 0 or the 100% marks are usually also very good take profit or stop loss levels. All right. So now let's get to the higher time frame analysis. The higher time frame analysis is simply going to the weekly time frame. Okay, let's move that. Very, very simply. This is the previous week low, and this is previous week high. Previous week high. The reason why I'm marking these out is because they are liquidity levels. What happens if a weekly high or a weekly low is taken? Here is a clear example, right? This was the previous week high. What did price do? Took out this previous week high, just like that, and started reversing. Going down into where? This liquidity pool right there. And stopped for the week. Boom. Easy explanation. The explanation is simply, if sellers want to sell, they want to sell from the best place they possibly can. If buyers want to buy, they want to buy from the lowest place they possibly can, right? The liquidity pool at the bottom. All right, cool. So let's move on to the daily time frame. Right, let me just quickly delete this. So the reason why I marked this liquidity out as well, because it haven't been taken yet. All right, and the same with this one. This week's low haven't been taken out yet. So it's still a very good liquidity level for price to visit. Let's go to the daily time frame. So the daily time frame, what is the previous day high? This one here. And it's very close to the previous week high. Right? Yeah. PDH. Oh, sorry. This is previous day low. Here at the bottom, and this is previous day high. That's it. That's it. The reason why I'm marking them out is because they are liquidity levels. What is the other nearest daily liquidity levels? As far as I can see, price is currently already reacting off this daily fair value gap. What did I say earlier? A 1, 2, 3 candle combination, where in the middle of the first and the third candle's wicks, there is a gap in the body of the second candle. You extend that fair value gap to the right hand side. What did price do? What did price do? What did I say? You draw your fib from the first candle to the third candle. Price went down, tapped into this fair value gap at the 50s and 61% level, and started going up. And what did I say? Bigger institutions out there make use of the Fibonacci tool. Right, so now let's move to the lower time frame. And this is where the entry model is going to make more sense. Right. Let's go to the 4-hour time frame. So now you see the 4-hour time frame. I'm going to use for my lower time frame direction. 4-hour time frame and the 1-hour time frame together. I'm going to use for my lower time frame. The 15-minute is nothing to do with direction. 4-hour time frame and 1-hour time frame is the direction that I'm going to make use of mainly. All right. So in this case, now we can see, all right, cool. Friday ended up here at the top of this high, more or less. Perfect. Now, what else can we see? We can see there's a massive fair value gap here in the middle. So that will be visible the moment the next candle will be printed, right? So, but what can you see here at this point in time? We can clearly see the 4-hour time frame is bullish. Why? Because we just quickly turn this off. Right. Because we closed above this bearish fair value gap. So an inverted fair value gap is a fair value gap where it's created, it's being respected, and then suddenly we close above it, disrespecting it, which means it's an indication of the trend on this time frame turning bullish. So currently the 4 hours bullish, and it also printed a new bullish fair value gap here. Beautiful. All right. Now let's go to the 1 hour time frame. And now you will see the sessions will become a little bit more visible, the trading sessions. All right. So let's move to the 1 hour time frame. Now here you can actually see. So this is a 4 hour time frame. This is a 4 hour fair value gap. Okay, right. And this is an a 4 hour inverted fair value gap, which is a bullish confirmation as well. Right, cool. So this New York session is bullish, the previous New York session. So let's now, this is now the lower time frame. We've worked this out, perfect, right? But here you can see the 1 hour time frame closed bearish here. So there's a possibility price might go down, tapping further into this fair value gap before starting to go up again. So that's a possibility. It also created a bearish fair value gap here as well. All right. So I'm just pointing this out to you because this is as the market flows, it creates the fair value gaps showing momentum in that direction. What did we do when we created this bullish fair value gap? Price started going up, tapped it, respected it, and started going up again. Easy as that. Going up, another 1 hour bearish, 1 hour bullish fair value gap. Created it, respected it, went up. That's why I love fair value gaps, because they are mostly respected. And if they are disrespected, then the price turns the other way. That's it. That's literally it. All right. So let's move forward. So I want to take a look for a specific trade. So this is now going to be a trading example, right? So now let's go to the 15-minute time frame. Remember, these ones that I haven't marked out with the names are 1 hour fair value gaps, inverted fair value gaps. And in this direction, there's also a 15-minute bearish fair value gap. So good indication of price having a momentum to go down at this point in time. Right, so now let's basically take a day of trading as an example for a trade, right? So let's move forward. All right, cool. Here's the Asian session. And as I said, what is a bearish fair value gap an indication of? Momentum in this direction. And this is exactly what price did. Exactly. And it created another bearish 15-minute fair value gap. And as I said, what did price do afterwards? It tapped into this 4-hour fair value gap. But not only that, it still created a bearish 15-minute fair value gap right there. And it's starting to respect it. Let's just quickly see what happens next. It respected that fair value gap. Boom. Price dumped further, even further into this 4-hour fair value gap. Beautiful. Beautiful, beautiful. All right. Created another 15-minute fair value gap. So if this was a trade, I would have traded after we created this bearish fair value gap. Well, not really, because at this point in time, the price was still bullish, right? Because we were still above this this bullish fair value gap. But at the end of the day, when you see a new fair value gap in the opposite direction, then there's a possibility price might go in that direction. Possibility, right? Because trading is a probability game. It's never an actuality. So basically, where would I have entered this trade if I was to look for a sell? I would have waited. So here's the indication that we might go down. Now, what are we waiting for if we want to enter a trade? We waited for price to possibly respect that bearish fair value gap with a retracement. Let's see, there's a retracement, there's a bullish candle. The open of the Asian session. We respected that bearish fair value gap, and also this is a 1-hour fair value gap here. Strong. 1-hour fair value gaps are strong. Very strong. So at this point in time, the 4-hour time frame was still bullish, but the 1-hour time frame was bearish, and the 15-minute was bearish. So this was a good indication to, once price respected this fair value gap, you can enter a trade. Now let's talk about stop loss placement. There are 3 levels where you can place your stop loss for this kind of entry on the fair value gap. Number 1, your stop loss placement would be strictly above the fair value gap. That's stop loss placement number 1. Number 2, the top of the candle that created, or that basically the fair value gap candle, which is this candle number 2, right? Or stop loss placement number 3 would be the start of the fair value gap movement, which is top of candle number 1. And then you aim for 1 to 2. You can see you can easily get 1 to 2, 1 to 3, 1 to 4 risk to reward trades. Easily. Easily. This is what I love about this entry model. Absolutely insane. Right, let's move forward. Right. So now we have this trade, right? Let's remove this now. So now there's another fair value gap that was created. But as this fair value gap was created, price also started retracing at least 50%, 61%. So this is an entry on its own. Literally, when this fair value gap was created, right, you could have entered straight away. And in this case now, since this fair value gap is not that big, I would have taken my stop loss here to the beginning of this fair value gap move and aim for 1 to 1.5 or 1 to 2. Let's have a look. Boom, we actually respected that fair value gap there. And price started respecting it, went down. Boom, there's your 2 risk reward trade. How cool is this? How cool is this? Boom. Looking at the momentum of this move, you could have taken entry here as well, but we're in the middle of a for our fair value gap. I would not have recommended entering from here, since there's a possibility that price could have went up. Because, like I said, what is a fair value gap an indication of? What is it? What can you use it for? Liquidity. So the middle of the fair value gap is a very strong liquidity point. So in this case, I would not have sold from here, from this fair value gap. So where did we tap into this for our inverted fair value gap? Remember, this is still a bullish indication, right? This is still also a bullish fair value gap. But we are selling with the 1 hour trend because that 1 hour trend is currently bearish, right? Bearish. Because we closed below this bullish fair value gap, turned it into an inverted fair value gap. We respected that fair value gap and price started selling off. That's why. All right, let's move forward. All right. We tapped into this inverted fair value gap. We just went on and on and on. Remember, this is still the previous day's New York session. We are now in the middle of the previous day's New York session. Let's quickly see if we remember, like I said, bigger traders out there always make use of their fib tools as well because they want to buy from discount or sell from premium. So if they want to start buying, I would say 50 and 61.8% level would be a good level to start buying from. All right, let's see. All right, there's a bearish fair value gap. Cool, but we are already in discount. So it would not be a great... You could sell. Let's see what happens if you would sell from here. Right, so there's a fair value gap. Oops, there it is. We had our 50% fib retracement, which is beautiful. I can already see that from this top to this bottom. We had a beautiful 61.8% retracement. Come on now. Take a look at that wick of that candle. Directly on 61.8%, right? So we closed below that fair value gap. You could have entered either here or here. Stop loss placement would be either here, here, or here. Up to you, right? So let's move forward. Damn, price actually went down. Would have gotten at least like 1-to-1 risk to reward trade. That's actually not a bad trade, to be honest with you. 1-to-1.5 sits here. It created another bearish fair value gap. Retraced into this. You could have entered another trade here. Boom. Stop loss. Take profit hit. Take profit hit. Could have actually caught a 2 risk to reward trade. Come on. Come on now. Beautiful. How beautiful is this? Absolutely insane. All right. So now we're getting into almost the start of the New York, the London session territory, right? So, but now what do you see? So here is 2 bearish fair value gaps. Let me just combine them. What did price do? We closed above it. Now, like I said, what is an inverted... If we close above a fair value gap, you create an inverted fair value gap. What is an inverted fair value gap? A indication of that the direction of where we are on that time frame is possibly going to change, right? So if you want to wait for you can actually use an inverted fair value gap as an entry as well, but this is more a reversal trade, right? Let's say if we want to take a reversal trade, how far are we here? We're actually inside the discount area of this New York session, so there's a possibility that this buy might work. But let's take a look. Remember, we don't use 15-minute for direction, we use it only for entry, right? So currently The 4-hour time frame is now bearish, right? Also, the 1-hour time frame is currently bearish, so I would not recommend buying here right now. I would stay out of that buy. But let's just quickly see if we would have bought. In this case, since it's so up so high, I would have taken my stop loss here at this fair value gap or one of these lows. And then at the most biggest, this level. Right, cool. Let's take our stop loss here. Let's see what happens. 1 to 1.5. Oh, and also it created a bullish fair value gap. Now, okay, that's another confirmation that that the 15-minute time frame is turning bullish. We tap that bullish fair value gap. There's a London time frame, and we're out at stop loss. What did I tell you guys? Why I didn't like this trade? Why? Because the 4-hour direction is bearish and the 1-hour direction is bearish. That's why. Always when you look for a trade and you want to have an entry, make sure that you trade with the higher time frame direction. All right, let's move on. This is now the start of the London session, right? What did we do? The first thing that the London session opened, we took out this Asian session low, right? Cool. But what did we also do? We disrespected this bullish fair value gap. What does this mean? Actually, what also? We created a new bearish 15-minute fair value gap as well. This is an indication that the 15-minute is currently at this point in time bearish, and we might actually get a sell, possibly. So let's just have a look. But remember, still the Asian session low is still a good liquidity level. Let's see what happens with price next. Sell off. Price started going up. It actually created another bearish fair value gap. This is an indication of momentum. Right. So if I would take a sell here, I would wait for a 61.8% retracement. Or 50, 61.8, and then go for a sell from here. All right. I would have entered here actually, to be honest. Okay. Stop loss here. Take profit the nearest low, which is 1.1, which is not bad. Or 1 to 1.5. Okay, price is playing around. It actually created a bullish fair value gap. All right. Just be cautious. Some traders that only make use of session lows and highs as direction would start buying from here. But just keep in mind that the higher time frame, the 1 hour and the 4 hours, is currently still bearish at this point in time. Okay, another bullish fair value gap. All right, cool. So here I would have been very wary of my situation. I thought to myself, maybe the 15-minute time frame is going to start turning bullish, because why? We closed above that. I would have actually exited the trade the moment that I saw this. I would have exited it right there, because the 15-minute time frame is now bullish. Boom. I would have exited there. You see? Boom. I saved myself from hitting the full stop loss. Insane. Insane, right? And if there are buyers, remember, I always say you look from both perspectives, both buyers and sellers perspective. And like I said, if there are people that only trade session highs and lows for direction, waiting for a liquidity grab, then what could you have done as a buyer to get into this trade here? Let's do this. Let's clean this up. What do you see? Asian low, taken. So you have a liquidity taker as well, right? And immediately, what happened? A new fair value gap was created, bullish fair value gap, and boom, this would have been my entry right there. Actually, right there. You could have entered after the retest as well. That's fine. And then you take your stop loss to, I think since this is so low here, I would have taken my stop loss here or here. One of those two, and you aim for 1 to 1.5 or 2 risk to reward. Boom. There's your trade for the day. Done. Done. So that's if your bias was bullish, right? So beautiful trade. Absolutely insane, beautiful trade. And momentum kicks in, creates another bullish fair value gap. Let's do this. Let's do this. Right? Let's move forward. Boom. We even tested that during New York Open. You see this move here? What's this? New York session. Because why? The 15-minute time frame is still bullish, but the higher time frame. Let's take a look at the higher time frame actually. Oh, you see during what did we do during London session? After we closed above that. I want to quickly have my eye on this level. I want to see where we close when we closed above that level. Here. All right, cool. You see, and also that's when the 15-minute time frame also started turning bullish. So at least one of the higher time frames, or one of these, the 1 hour, 4 hour turned bullish, and the 15-minute is bullish at the same time. So I would have actually also thought about looking at buys from this level. Okay, 4 hour time frame. At this point here, 4 hour time frame was still bearish. All right, cool. And yeah, guys, that's basically the entry model that I'm using for my trades now going forward. It's absolutely insane. It's absolutely nuts. You can aim for such a big profit target with this entry model. Absolutely insane. You don't even have to look at the lower time frames. 5 minute, 3 minute, or 1 minute. It's absolutely insane. I'm telling you, this literally changes the whole game for me completely. So I really hope I explained this strategy as best as I possibly could. And yeah, I'm going to stop here, but I'm going to do more examples going forward, my live trades and just more backtesting as well. But yeah, I really hope you guys enjoyed this one, and I hope you also understood the way that I explained this strategy. If there's any questions, you can leave it in the comment section below of this video, and please like and subscribe. I really hope you enjoyed this one. Cheers.